All right, good afternoon and welcome to the end of day review for today. And today is right here, October 15, 2024, and it's Tuesday, just a second trading day of this week. And so far, we see, just today, Monday, and Tuesday, we have a beautiful price action. It moved a lot. So if we catch the trends, we can go to let the winner run right there. Yesterday, we can let the winner run, and today also. By the way, we are in week 42. We are in this week 42 right here of October. And by the way, we forgot to mention that October is earning reporting season. So we have earning report in April for the first quarter, and then we have earning report from July, August for the second quarter. So basically, I think it starts from. So basically, March and April is the earning season right there, and then July, August, and then we have October. Yeah, October is an earning, and some of them report late in November. But all big companies go around the late of October and early November. It's similar to. But so keep in mind those April, July, and October is earning season in any month right there. That's which what we saw yesterday. The market moving a lot yesterday. And for this month, we are gonna have a GDP data on Wednesday and on Thursday for GDP data and PCA data. So October 30 and PCA October 31st. This month we don't have any Fed meeting, FOMC, until November, so next month. So that is an economic event for us for this week and this month. All right, let's go to the charts now. All right, so before we go to the chart on a 15 minutes, let's look at the daily. Right, we see that it's after the Monday, it's Benson right there. You see the right there. We see that it's reversal. Today is a reversal day. A very interesting day right there. But as you see that right here, you see the reversal right here, and then boom, it go up here, it do retracement and consolidation and then expansion. It will never reversal from here. That is the logic of ICT price delivery model right there. But but after this expansion, the reversal gonna be happen right here. If it happen, it's gonna be reversal right here. Right? It's not gonna reversal right here because it does not have enough liquidity for lack of a better term. But the algo run is it try to build liquidity, so it needs expansion and then it reverses. So basically, what we see today is a reversal. So looking for that it's gonna take all this low, it's gonna fill this gap. Look at this gap gonna get filled. Just watch this gap that create look like gonna fill this gap in September. So yes, that's our analysis right there. So basically you have yep. It's similar to the if in sync with the weekly right there. If you put side by side, you can see that it releasing up direction right there. So basically, you have a reversal, expansion, retracement, expansion, and reverse. Right here, you have the same. Right here is a retracement, expansion, retracement, expansion, retracement, and then expansion. So when the price come out at retracement, it's gonna be expansion, right? And after expansion right here, it can reverse right here. Yeah, it can reverse from here, or is there any way it can not reverse here? That's the question we need to ask. Right here, it looks like a retracement, so it should not be a reversal. It's not trick at reversal right here. So it's a retracement. So this can be a retracement right here. Accusers can be a reversal, which is in sync with the daily time frame right here. So basically, we have. Here's what we have. Let's take this screenshot and we do some annotation right here, right up right here. So basically we have a reversal right here. It's a reversal, right? And then right here we have a retracement. Let's turn this around. So okay. So this is a reversal, and then it's retracement, and then this is a expansion. And after expansion, it goes to retracement again. Right, retracement again, and then expansion. So the next way here gonna be reversal. That's the question without the theory, or that's our thesis right there. So remember this. So if and our thesis is gonna come down and fill the gap right there. Yeah, basically this is a reversal. Start with this is a reversal. Right, it's reverse from this. Boom, it reverse. Reversal, which is expansion right there, and then it come to retracement. Yeah, it will never reverse from here because all reverse here, it's not gonna reverse from here. Yeah, it does not have liquidity, right? So you have to do a retracement right here. Retracement. And then after retracement, it's gonna expansion. Right, that's the beauty right there. Expansion. All right. Yeah, we have to go with the high time frame. In this case, daily, so it gives us the context to trade in the 15-minute time frame. And expansion, it's gonna go right here, which is a retracement. That's right, a retracement right here. And retracement, then it goes to expansion again. Yeah, so far we see one leg expansion right here, or reversal. Yeah, reversal, or expansion, 2, 3. 3 legs expansion right there. If you count this reversal, but it's expansion right there. So 1, 2, 3 leg up right there. 1, 2, 3 leg up. You see that? So the next 2-3 weeks we watch for right here, it's gonna be reversal. 6. That's our theory right there. Why reversal? Why not retracement and or consolidation for that matter? Consolidation. Yeah, consolidation. Okay, so here's, yeah, we can see the physics, the theory right there. So it's reversal. All right, auto reversal, and right here you see the retracement. This retracement different than this retracement. This retracement is like two legged out, but this retracement is kind of consolidation. Right, so we can consolidation right there. Equivalent with consolidation. The reason we want that node is because after the price come out consolidation expansion, then it's gonna reversal, most likely. Right? Most likely, the price come from the consolidation, it's gonna expansion, and then reverse. That's the theory right there. Yep. So that is our ICT price delivery model analysis right there. Let's look at the model that we use. Yeah, we always try to refer back to this model right there. It's like the wheel right there, where you says expansion, and it's gonna go to consolidation, and it's gonna go to expansion. It's gonna go to retracement, or right into reversal. The beautiful is consolidation, expansion, and reversal. That's 3 steps right there, ABC right there. It's similar like accumulation, manipulation, and then boom, reversal. So that's our theory right here. Accumulation, which is consolidation right there, right? Actually, it's a retracement, but it go into consolidation right there, which is perfect. Yes, from retracement it can come down to consolidation. So basically, you have the right come out consolidation, which is accumulation, manipulation, and then boom, distribution, and it's gonna fill the gap. So that's our anticipate right there. So it's AMD model right there, right? That's few that. So that's an idea why we believe that it will reversal from here. Why we believe that. That's our direction bias for the next 2 weeks or so, or at the end of the month. Yep, by the end of the month, you see that right there. So right here we see on the weekly, this candle is supposed to be down, but it flip in order to do manipulation right now. So basically, it's gonna break and then reverse. That's is in terms of weekly. We want to see right there. You see it break it level, then it will reverse. So it's see level right there. This one is supposed to be retracement right here, but it flip. We saw the flip. So but if we look right here, what for this level on 50-30. Watch for the level. It's a very key level. 50, yeah. We give it a color code is weekly. Alright, yeah, what is this color? Yeah, watch for that level. If we break down that level, then looking for the reversal all the way here. Maybe you see the equal right here, the equal low here is 57.24. 50, yeah, it's not equal, but watch for that. Yeah, maybe it may go down here. You see the level right there, the low, right? It acts like, yeah, it acts like it break level, but it's gonna come down. So watch for this range of the candle give us a lot of clue. What's the low of this one? The low of this one is 57.45.25. So 47.25. Yes, so for next couple of weeks, we're gonna watch for this level. Yep. Oh, exactly. You see that on a daily time frame, that's the range right there when it broke. Want to see it touch level. If it break level, it's gonna hit. You see, it tests this low twice, and then boom, it break the high range. And now we watch for the fall breakout right there. Very beautiful to watch. So yesterday we have a huge rally, and today we have a reversal day. So very interesting. And you see that yesterday at 8:30, right? Yeah, we already see that it's already make the liquidity iterate the buy side liquidity. So it's just expansion and then retracement and boom. It flipped right there. But today we see a little bit different. At 8:30 you see that the open is already way above right there. So basically it's a gap. It creates a gap. If we look on the regular trading hour, here's the gap it creates. You see, it created a gap yesterday, and it kept rallying, and then the gap it filled today. So the gap filled next day, which is today right there. You see that? Feel the gap exactly. So this is another model that we can build around. Whenever we see the gap and the huge rally, then pay attention for the next day. It will reverse and fill that gap right there. So that's another detail that we see that's the difference from today and yesterday and today. And today you see that the London range is between the same like yesterday, right? Between the New York PM range, but before 9:30 the price already break upside, which is expansion right there. But today the expansion right here is very limited. It's just around the London, and you see it's below the open at 18 right there. And right at 9:30 you can see the setup right here, type 1 reversal, break type from above and reverse. We did took this trade, but the mistake we made that we exit the trade early because we feel like it flipped. That is a fall flip right there, and this one also fall flip. If we want a real time, we're gonna show you in real time. You see that the fall flip 1, 2, 3, 4. I mean, 4 flip, and then this candle just flush right there. So basically, it go up first. It create a 4 flip right there. We thought they're gonna reverse, right? We see that expansion and then retracement, because we're thinking that wow, it may go right the buy side liquidity, because that's the range right there, right buy side and then reverse. But in this case, it don't even rate the PM. So sometimes we have to see why it did not rate. But right here it give a signal right there. It's 4 breakout right here, type 1 right there, and we did took a screenshot of that. But by the way, the one of the thing we want to point out that a lot of, I mean, at least 3 or 4 flip right here, right? It flip up and then it flip down. So if we are short right here, we have to be, don't move our stop loss, because the minute we move our stop, we get stop out. This very tricky condition right there. We find the same scenario happen on September 26. You know, go to the chart September 26. We can see that the similar condition happen. September 26. Right here, we almost there. 30, 29, 27, 26 right here. It's right here, similar. You see that? But in this case, the 930 is a bigger, down close. And also right here we have this one is huge break, and then it create a double rate scenario right here, and you have, you have a setup right here also, test from below break and reverse also. So this setup is much easier to follow through than the setup for today. But the idea that it's just very tricky when it make a 4 flip right there. If we stop it out immediately, if we move our stop loss. So whenever we see the condition, watch out. Don't move stop loss too early. Let's watch the video, the recording for today, and September 26. We can see the similarity. All right, so right here we see that see that? Yes. So it looked like it flipped, right? That's the 4 flip right there. If we go long or we move our stop loss too tight, we got stop out. That's crazy right there for today. We did see that today, and we did short them, and we did get stop out early. That's the huge lesson. Really, you see that? And it flip up again. Yeah, same flick out. You see that? Okay. So right here we see the setup right there. A 4 breaks out, type 1 right there. Break, test from below, and then reverse. That's our bread and butter setup. Yeah, right here, go back to our simplified model right there. So basically, it's break, test from above, and reverse. Exactly, you see that? And you see it right there. Who thought, we thought, all right, so it may reverse from here, because you see the test from below right there. So it can be a reverse from here. It looks so attractive to go long, to change from short to long right there. So this is a 4 flip that we're talking about right there. It creates so many of them, at least a couple of them. I did 3 of them 3 times in a row. You see that? So who thought that, it's going to be short? So when be careful with this, You see that? Again, one more time. Yeah, it's crazy. You see that? Oh man. So we switch, we go short, and then we thought it, it's gonna be long, so we switch. So we struggle a little bit right here. We make a lot of mistake right here, and we learn a huge lesson that don't move stop lock too tight because it gonna come down because too much shallow pressure right there, for lack of a better word. Yep. So all of this is just fall flip we're talking about right here. We thought that it's gonna be uh, a reversal. You see that at one point it's look exactly like a reversal. And here's the minor detail. Okay, so it tests the low of London above, then it will break it. If it break below, then it may reverse, but it not. So that's another signal to tell us that stay in the trade, don't move the stop loss too tight if we are short them. So 1, 2, 3, and you see that the fourth candle is gonna flush very big. You see that? Flush very hard right there. Boom. And we all go all the way to the 930, the previous area range right there. Yes, it breaks down, and if we look in the, you see that in the electronic, not regular trading hour, it go down and fill the gap right there. The end of the day right there. So if we let it run, it will go all the way down here. And here's right here, the trick right here, right? So whenever we see a huge down move right here, so basically you have a reversal right here, expansion and reverse. It will not reverse from here. Yeah, if we want to reverse from here, this one has to be explosive. Will be a engulfing candle take over this one. It looked like at one point, but then it gets rejection right there. So whoever chase right there get in trouble right there. Okay, so here's the tricky right here. I think we did go long right there, and we did go long there. But if we go long, we thought that if you break, you see lower here, break, test from below, then you're gonna reverse. But that a minor detail here, you want this gonna be rate this buy side already. Otherwise, it's still in the range right here, so it's gonna be a retracement range, and they're gonna make another leg down. We have to be careful right here. You see that there, the setup right here, the long right there. Yeah, you want this have to be test. It rate the buy side of the candle. You don't want it to be in this candle, in the range of the candle. You have to break out the range. We did took the trade right here, and we set the target too high. It did not reach the targets. But the point we try to make right here, that whenever you see this, the doji candle right after the big down close candle or up close, if maybe this we think the bigger candle range, then watch out for the neck like that. It's not gonna reverse. Yeah, if you trade long enough, you can see this pattern right away. Yeah. So if we want, yes, right there. So if we go long there, then our target is just this buy side or the high of the candle, we have to get out, because otherwise we're gonna get crushed, because it's gonna be make a second leg down. Don't mistake that with a reversal. It will not. I mean, at first we thought it will, but look at the way right there, it not. So that's the lesson. We see that there. Yeah. So whenever we see the doji candle between a big, candle move, watch for the range of that candle. If it failed to break the high, boom, go in short, back for the next leg down. You see that? And right here, it also trap who want to go long right here. Who short, who chase, we get stopped, and it tries to trap people to go long. And look, yeah, you see, it make the second leg down right there. So watch for this candle. If it failed to break the high of the candle, then going and short them. Yep, we go to short for next leg down right there. Yep. We did do a short trade right here, but we get out early. We make a mistake right there. And right here, we try to go long right here also right here. It's very key right here. The last try we go long right there. But look, it's gonna hit, yes. So if we go long right here, we have to aim for this. Actually, we aim at this, but it never hit that. So the best way, the low hanging fruit is the high of the candle. If we want to go long right here. Yeah, because sometimes it never hit this, even though it hit the buy side, but it never hit the sell side of this candle range, but we never hit the buy side right there, the high right there. But for this candle, for sure, right? We do the long trade there. Let's sort of trade with two. Yeah, here's right here. We take a long trade right there. But we aim at 68.25. 68.25. Yeah, that's the high time frame level right there. The low of the prior day. But that is too much fake. It will not hit that level. It just hit the high of the candle. So yeah, you see that if we put right here, we get our target hit already. But yes, it only goes there, or the high of the candle range. Yes, that's what we're trying to make. Or the high of this, we already had, we will hit right away. But we put a little bit impatient right there. We are too much basically. Yeah, at the end, we just it's close the trade first, because at the end, so it's close. Yeah, so when we see that it take the low of the candle, then it's gonna take the high of that candle when it reverses. So that's a low hanging fruit right there. Don't aim too much, and in this case, right, it's the sell up day. You're not gonna expect the last minute you're gonna go and catch the high level right there. Yeah, here's the tip that on September 26th we see a similar, the four flip right there. It's very hard to trade if we move our stop loss. Basically, the way it move, it will take out anyone who move their stop loss. So don't move. If we trade on this kind of day, then just stay tight. Don't get out too early. Let's see, at one more, you see there, the flip right there, it looked like it's gonna go long, but then it turned to short, it turned to sell off right there. and we're gonna see. You see it flip again. You see that? So if we move our stop loss too soon, we got stop out. We missed a huge down move. Similar like today. We should get stop out a couple of times. And you're gonna see a fall flip right here. Look like a yeah, here's the 1 hour time frame. You see that? See the flip right there? We thought it's gonna be a long setup. You see that? Break, test from above, and reverse. That's the flip we're talking about. It's similar like today. Basically, the wick on the top right there, it fool a lot of people who want to, play reversal like us, right? We love reversal because it have a momentum in there. But today or similar on on September 26, it create a lot of so-called false flip. Yep. Yeah, similar to that. I think that's the thing, the similarity we want to. Yeah, you see that the flip right there, not a huge flip right there. You thought they're gonna be, reversal, but boom, it go down and it riff. You see that? That's similar exactly like the phenomenon we have today. So at least we have that in our playbook, so we be careful. Next time we see the conditions similar, then we will let it run. Let the one winner run instead of move out sell off too tight right there. I think we cover good topics, good lesson learned for today. What else we want to see? Yeah, so whenever we see the huge move down here, watch for the next doji candle, and you see that it failed to break to this high. Get ready and short for the next leg down. You see that? Next leg down right there. If you don't see that, then don't short them. It will reverse. Look right here, you see the phenomenal. All right, so for this one, similar, right here you have a huge down move, and then boom, you have a doji right there, and it break above that. So look, you will not see that it's gonna be it's not gonna be a second leg down. It's gonna be reversed from there. So watch for that. You see that? That's reverse or retracement and expansion right there. So watch for the huge down move and watch for doji. So give us some clue that whether it's gonna be next leg down or it's gonna reverse. This is a very good example, right? For today, you don't see that. You see it felt break this level and it dropped. But for this, on October 10, it's retracement and then boom, it reversed. Or expansion for that matter. The similar, let's see other similar situation where you have a big down move and then right here you don't have that. But right here you see that's the up close candle after the down move. It take the buy side. It gives you a signal right there. Mark the high, the low of that. This case, perfect example. You see that? So let go through real quick right here. So basically, the first up close candle after the down move, you mark the high and you mark the low right there. You see, okay, so in this case, it break up the high of this candle right away and wait for another move down, and then we can go in and go long. You don't see that today. Let's say you want to go long right here at this candle, you mark the high and mark low, right? You see it couldn't break above the high, so you know that it's gonna be next leg down. The other case, it will reverse from there. So that's the signal that market want to tell you whether you want to go long or short right there. Let's go back to that example right here. You see that, right? It's not like today. Today, this candle have, huge right here. You see, and other candle not break the high of that, and they make a second leg down. With this one is reversed. So watch for this. It gives us an idea that whether we're gonna play for the reversal or we're gonna play for the next leg down. That's the huge lesson we learn after a huge expansion. Come from reversal, right? It's reversal. It's gonna be not reversed right away. You see that it's not gonna reverse right. It's retracement right here. It will not reverse on this step. It will retrace and then it turns to expansion. Yeah, this one is a little bit different. Yeah. All right, that's the thing we learned for today. All right, thank you for your time and interest. Grateful for this opportunity, and we do what we love, and success coming our way day by day, little by little. In every way, we're getting better and better. Thank you, and see you tomorrow. Bye for now.